All right, so welcome to today's charting basics class for the free people on the Discord. If you've seen one of my classes before, you're gonna see basically the same thing that I've talked about. But I think that charting basics is important to getting started with your trading journey. So if you're not familiar with this website, it's called TradingView. It's a platform that you can do a lot of your technical analysis and your charting on, but you can also actively trade on it. I'm not one of the people that trades on this platform, but people use it all the time. Um, but yes, this is called TradingView. This is where we go to do all of our charting. Um, this is where I usually send people to kind of play around with marking up their charts. But this is the platform. All right. So here you can look up all kinds of stocks, ETFs, futures, forex if you're into that kind of thing, and crypto. They also have indexes, bonds, and they do have options, but I don't really use this. I've never really used this. So today we're interested in basically stocks. So I have Rocket Lab open with basically a bear chart minus volume. And if you're not familiar with what you're looking at, you're just looking at price over time. And what we're looking at here are candlesticks. Candlesticks come in two types. You have bullish candles, which are green, and you have bearish candles, which are red. Bearish candles open at the top and they close at the bottom. And what I mean by that is that right now we're looking at the daily chart. And if I'm looking at this red candle, I'm saying that this candle, or the price of Rocket Lab on this day, opened at roughly $63, and it came all the way down here and closed at $55 for that day. The same is true for bullish candles, but the opposite. So bullish candles open at the bottom and they close at the top. So Rocket Lab on Friday, December 19th, opened at $61 and closed at $70.50 or so. These candles tell us where price is and where it could potentially go. For technical analysis, a lot of it can be chalked up to positioning your probability. So when you're looking at a chart, you are looking for a probability that a move will happen, not a certainty. So the chart tells you how price is moving, but it won't tell you why it's moving necessarily. So this chart has a bunch of candlesticks and it shows where price is going. We can use technical analysis. We can use technical analysis and key levels, and I'll explain that in just a second here, to understand where we think a stock will have supply and demand. So you may or may not have heard these terms before, but basically supply is where lots of people want to sell off their shares, so there's an overabundance of people who are looking to sell, and then demand is where an area is where a lot of people are looking to purchase shares or buy shares. We use this in a general sense to figure out where are majority of buyers and sellers waiting to get in or out, right? In trading, you want to have an idea of a direction, but you also want to think of the millions of other shares and people that are trying to also think that a direction will occur, because without it, right, that move may or may not occur. And that can be seen through these bars at the bottom, which is volume. What volume tells us is how many shares are being traded in that given day. So if I'm looking at Rocket Lab's chart here, I can say that, let's say on these 2 days, the price of Rocket Lab didn't move a whole lot and volume was low, right? But then as the days go on, I can see that volume starts to pick up, and it's a green day on a bullish candle, meaning that lots of buyers started stepping up. So if I'm a person who thinks Rocket Lab will go up, maybe I'll look at this day on Thursday on December 18th and say, buyers stepped up, volume is starting to increase. It looks like demand for Rocket Lab at this price level, or in this price level, might be decent to buy up. And if you have conviction in that and you buy shares, and we see what happened to Rocket Lab in the preceding days, right? It's not to say that every candle that you look at will tell you exactly where price will go. That's almost always never the case. What it does give you, though, is an idea of where you could potentially enter and where you could potentially exit. So in today's class, we're just going to go over our supply and demand, or support and resistance. Demand is equivalent to support, and supply is equivalent to resistance. So when I'm charting, I usually chart on the daily chart first, but you can go, if you want to zoom out more, you can look at the weekly chart to get a better idea of like, oh, how did the stock trade within that week. But I usually start at the on the daily, right? So on TradingView, we have lots of different ways to draft up our chart. You know, we got trend lines, horizontal lines, all this good stuff. And there's tons of different tools, which I won't go into today. Today, I'm just going to go over key levels and how to mark them. All right. So a key level is an area where price went to and either bounced off or rejected multiple times. So when I look at Rocket Lab's chart, right, in the last year, I could say that, you know, Rocket Lab came back down to this area around 40, and it tapped once, it's tapped twice, it tapped 3 times before eventually pushing off of it. So then maybe I think, okay, I'll mark 40. And typically a key level isn't necessarily an exact price. It could be an area. So if you wanted to like draw up an area on TradingView, you would just go here and click rectangle, and then you can kind of draft up an area where you think demand would occur, right? So just like that, I've kind of marked out for myself where I think there's a decent amount of demand. And now I'm going to be looking at areas where I think there might be a decent amount of supply. So that would be areas where the stock touched higher and rejected down, or, you know, it could be a point of resistance that gets pushed through. So like this area here, but in October, Rocket Lab had a high of 73, 74, 73 again, and then 73 again. So like if I'm looking at this as an investor or as a trader, really, I would maybe mark out 72, 73 as this area where price couldn't get over. What these candles are telling me is that price went up here, but then it got pushed back down. And we can see that with what we call wicks. So on the candlesticks, you have wicks. Wicks can be to the top side or bottom side, and that basically tells you where price was highest or lowest. So here we can see that price was highest at 73.5, and then here was roughly at 74. So technically Rocket Lab went up to these prices, but then got pushed back down. Wicks are very important because it kind of tells us where buyers or sellers are getting exhausted, right? So if I'm watching the price of Rocket Lab during these couple of days, you can say that, okay, well, it's at 70, but then, you know, buyers tried to push up, but then ultimately they got squashed, right? And the supply outweighed the demand in this area. And we can say that, you know, it got up to this price, but because these candles closed out bearish, it means sellers took control in this area and really pushed the price back down. So I'll mark this as my key level around 72 to 74. So this is, if I'm trying to get short as a trader, I'll take a look at this, right? And if I like try to make it so it only shows like the couple of candles, I guess. There's a way to replay on TradingView, but I don't use replay on here. So if I'm looking at these candles, right, these 4 days worth of price action where it's rejecting 73, 74, I might say, okay, on the next time it tries to go to retest, I might try to get puts, or I might try to get short here. And you know, that gives you a decent chance, right? That it gives you a decent chance that the price will go back down here because it rejected multiple times. The more times something rejects, the higher likelihood it'll reject again when it goes to retest. It's not always the case, right? But it does give you a decent idea. Same kind of concept for when price is diving, right? say you're in the put here, you're holding. It came back up to retest, a little bit of the price here, this area, and then it kept coming down, it kept selling off. And you'll have your own stop loss parameter, right, for if it shoots back up against you. But that's a topic for a different day. Today is just looking at key levels. But basically, like, it's selling off. Okay, so now, if I'm a buyer of Rocket Lab and I'm seeing this sell off, right, I want to look for a price. I want to look for where supply or my support would potentially hold. And we can look at previous data to see which areas that might be, right? Obviously, when you're looking at this in hindsight, it's like, oh, these areas are so easy to spot, right? But if you're looking, if let's say that this is the only amount of data that you have and you don't have any of this yet, like basically none of this has happened yet, right? You might have an idea of where price would go here, right? But you really don't know for sure. You just have to give yourself a decent chance of success, right? So if I'm looking at where do I think another piece, where support could occur, right, on its way down, it could be at 60, nice round number, which look here, it came back down from 73, 74, down to 60, retested, bounced up a little bit, but then we're testing a higher low, or a lower high, and it pushed back down through 60 here. So as I'm looking at it diving, I'm looking at points where previous resistance could be potentially support. Usually when a stock is pushing through an area of resistance, then that can potentially be an area of support, because by the price pushing through resistance, it's telling us that buyers were interested past that price to a certain point, right? So if I'm looking at spots where price had a tough time getting above before, right? So like 52, it came up here, rejected. Came up here, rejected. Came up here, rejected. And then it finally got enough volume and pushed higher, right? And as it was discovering higher price here, we could say that maybe this level at 52 could be a potential bounce spot. And in Rocket Lab's case, it kind of pushed through it and then back up, but then the preceding candles were quite bearish with decent volume through it. So then it kind of invalidates this point of resistance, or support, sorry. So, your key levels will change as more data is available to you. Are there any questions regarding like how I'm finding these levels and how we can trade them, sort of thing? I'm not entirely sure if I'm making too much sense right now. Ask questions in chat so then I can at least clarify or simplify or elaborate. Type in chat and I'll answer. So what is decent volume? So so volume is relative, right? If I'm looking at, say, this area, right, where Rocket Lab is diving, it's getting a little bit of, a little leg up. Buyers are trying, right? But then we're approaching a demand zone here, right? If we're approaching this demand zone and volume slowly dying off here, maybe I could say that sellers are starting to get exhausted here, right? But you won't know that unless you're actually going into a lower time frame. Right now, we're looking at just the daily, but if I go to the 4-hour, or if I go even lower, I could go to the 30-minute. The lower time frames can give you an idea of where the intraday movement is, right? So like, look, I have 40 marked out as my key level, and I can see here that we tested 40 on November 24th. We tested it on December 1st. The volume here right, was decent selling in the morning, but then it kind of tapered off and didn't do a whole bunch. And then the next day, tons of buying volume on the preceding day, on Tuesday the 2nd. And then the day after that, we see a bunch of buying in the morning and continuous buying throughout the day. So if you are looking at a lower time frame, you can look at the buying and selling volume on a per time frame basis, right? So on the 30-minute, if I'm seeing a lot more green volume candles at, and they're higher, then that could tell me, right, that there's a decent amount of buyers for each of these candles within this day. And that can give you a good idea. So like here, sellers started off kind of strong, but then they got absolutely demolished the rest of the day. And buyers just kind of came up and the price continued higher. And what you want to see, especially for if you have a key area that needs to hold, is what you want to see is you want to see volume increasing in the direction that you think is going to be bouncing, right? So buying volume here is slowly increasing. And then if you get like a nice momentum candle like this one, where it's mainly just all body, no wicks, that's a great sign for upside, right? So here, huge bearish candle with the topside wick means sellers had control most of the day, pushing price from 64 all the way down to here. We did get somewhat of a double bottom at 52. A double bottom is just where price basically bottomed out over two separate candles. This isn't a true double bottom because the price for the low isn't exactly the same, but it's pretty close. But here we're seeing a tight price range for these 2 days, and then we're seeing volume picking up with expansion. And what we're seeing here is huge bullish momentum candles with no wicks, with huge volume. So like if you're trying to trade this bounce, you could look to get in at 55 or so with the stop below, 50 to try to get long. And basically as it's climbing, you would adjust your stop higher or your take profit higher. Like if I was to get long here at 55, I might put my take profit at this previous point of resistance up at 71. And the price is telling us previously that it pushed through, right? But then it went to go retest the area again before pushing higher. If you had longs for Rocket Lab down at 55 and you're up here, you may get stopped out, right? At this area. You might put your stop here, or you might put it a little bit below it, because then you're thinking, well, resistance could become support on this retest, right? But Rocket Lab in this instance was going through what we call price discovery, where it's creating new highs. So the market and traders don't necessarily know where the highs will where the highs will stop and where the retrace will also stop, right? So then you kind of are somewhat guessing where that pullback will occur, right? So like here, went to all-time highs, but then came back down and is now retesting this area again, and it's looking to fail this prior resistance. So it may not be support anymore if it closes below this. So if I'm a Rocket Lab, like if I'm looking at Rocket Lab, I might be looking to get puts here because, we're starting to close under this key area that it either bounced out of or resisted multiple times, right? So then Rocket Lab might find itself selling back down to 52. So how far back do you look to see levels? How far back is too far back? There's no such thing as too far back. There are some stocks that have just been absolutely hammered for a long time, right? So Netflix, I'm looking at Netflix on a weekly chart, right? April lows are at 82. Netflix is currently hovering around 75. But if I want to look at where Netflix was a long time ago, I could definitely look at key levels on a weekly chart, right? So 70 is a decent spot. This is where it got sold off really hard before. And then if I'm looking at spots where Netflix got bought up, I might mark those on the weekly chart. So there's no such thing as zooming too far back out. It's all data that's relevant to you, right? Like PayPal has had a huge sentiment shift from being this one-stop shop place to do transactions to being basically at IPO price, right? Where is the support resistance for this? God only knows, right? You could find some support at 30 down here, right? But if you're gonna be buying PayPal, I would buy it more for the fundamentals than the technical analysis, because the fundamentals are technically, they're getting really good with this dive. I mean, all-time high from 310 to 40. That's quite the retrace, Is that first yellow touching a demand zone now? So like here, right? This is something that I had marked out a while ago. This is roughly 58 to 60. This would be what I consider a previous demand zone that it's somewhat respected, right? But now we've completely broken under it. So now that's telling me, okay, well, I guess buyers are just really not confident at all, and now we're just seeing absolute dump off. So support resistance gives you an idea. It doesn't necessarily mean XYZ is going to happen, or where price is going to hold up, because the technical analysis just kind of gives you an idea of how the price is moving, right? But it's not telling you the catalysts. It's not telling you the sentiment that's necessarily happening, right? Like Amazon had pretty good earnings. They did miss EPS slightly, but their earnings were good. I think their projections are good for 2026. But look at this, right? Previously, before their last earnings, we had nice higher lows. We were trending higher lows. I marked it out from one of my other classes. So we had an initial low at 210, higher low 215 or so, higher low 220, higher low 225, and so on and so forth, right? And we kept climbing and climbing. But then here, we weren't making higher highs, right? And if it fails to make higher highs too many times, right? If you're a buyer and you're watching Amazon stock go up, but then it's constantly rejecting, you may not be happy with holding your stock there, right? So then you say, okay, if the price isn't getting above this level, I'm just gonna sell, because it most likely will come back down, and then I can buy at a cheaper price, right? So that you got to think of the psychological aspect, and that's why like a lot of key levels are typically round numbers, because people like round numbers, and the market runs off psychology. So can you go over SPY over the last few months if possible? Yeah, I could take a look at SPY. Are there any questions about candlesticks in particular? I know I kind of went over them pretty quickly, but if you had any questions regarding how else to read them, or like if you have a question about wicks or bodies of candles. Yes, this session will be recorded. I'll put it in the free lessons chat afterwards if you missed the beginning. Yeah, no worries. Okay, so we're looking at SPY now. SPY has been somewhat caught in a range, a fairly tight range, I must say, between 675 or so and, all-time highs. I marked out a previous high here from a while back at 689 or 690. Price has kind of been chopping through it a little bit. We had a huge bearish candle on Thursday. We had a rejection of the high on Wednesday, and today we are getting what we call a spinning top, which basically the body of the candle is nothing, and we have long wicks to the upside and downside. That's basically telling me that there's price indecision for SPY, right? So it's tight range between 686, 680. I mean, that's actually that's somewhat wide, right? But there's no real direction here, right? SPY tried to get up to 686 and above, but couldn't, so that came back down to 680, but then couldn't break below 680, right? So if you're trading this, I mean, today's price action was pretty rough. But if you're looking at this range, what is this telling you? Well, that tells me that buyers and sellers are just fairly even here. What does this mean for us? Unfortunately, it's an indecision candle. It tells us that neither buyers nor sellers had any control of today's session, really. I mean, they had their moments, right, where we were buying in the morning and then we're selling off, but then the sellers couldn't break key levels down here, which, if you are a swing trader, you might say, okay, well, sellers pushed us down, but they didn't push us down that much. So maybe you might be inclined to trade the bottom of this range back up to all-time highs. So that's what I'm seeing on SPY. I didn't take any swings because a close like this is pretty trash. Also, it's a 4-day week next week, or a 3-day weekend. So swing trading into 3-day weekends is kind of sketchy. But yeah, if you're trading SPY, you could trade the bottom of this range around 676 to try to get a nice bounce up to all-time highs. However, if we do break below here, then there's quite a bit of room to fall. We have we have November lows, October lows. You know, that's 20 points of movement to the downside. Can I go over Microsoft? Sure, I could take a look at Microsoft. So Microsoft is an interesting one where Microsoft has a pretty wide gap from 424 down to 390 or 380 or so. And it tried to bounce off of 390 and tried to find some room up into 420, back into the gap. But it has since failed, as most software companies and market sentiment has been fairly bearish. So I do see Microsoft coming back down here to 380. That's kind of the general area where I'd be interested in buying, would be here. And if I zoom out to the weekly chart, kind of gives us a better idea. Look, I was trading Microsoft back in 2018 when it was only $100. And before that, you know, it was in the 60s. Kind of crazy. If I look at a weekly chart, right, I can say that, you know, Microsoft has key levels at 80. You know, it tapped here, broke above, tapped here a few times, and then, you know, it kind of had a momentary dip into April. April is kind of a weird situation because it's a fabricated dip, right? So is that data reliable? Who really knows? But I marked it. So like 380 could be an interesting add level, and 360 would be below that. And if I'm looking to add Microsoft even further down, then 340, 320. So basically in segments of 20 all the way down, and as far as it will go, right? The weekly candle on this has a really long wick to the upside, which tells me that lots of sellers came in and pushed the price down, and we could see some continuation on Microsoft into next week. GILD as in Gilead Sciences. So this one is a momentum trade play. And because it is a momentum trade play, I would add simple moving averages here to kind of give me an idea of where I would have wanted to enter for this. So if you don't know what a moving average is, a moving average is just a line on a chart that takes a certain amount of data points or candles based on candle price, and it gives you an average. Traders will use averages to give them an idea of where momentum is on that stock. So the 10 and 20 is kind of standard for momentum trading. And what we can see here is price is in an uptrend. It's in a clear uptrend here. Absolutely clear uptrend, right? So anytime price pulled back a little bit into these moving averages, or had a nice little bounce, you might be inclined to get long, and that would have paid, right? So if you were a buyer of Gilead, you might be a buyer at 110, 115, maybe this 120 area, and the moving averages are telling me that you know, we're getting a little bit of buying up here, some consolidation, and then a push with high volume off of this area here past this recent high at 127 tells me that this trade or this stock has a lot of momentum to the upside. And what you would do is basically you could take your trade at 125, have a stop below the moving averages around 120, and then hold, and then have an invalidation point below moving averages, right? So if I mark this at if this green line is my entry at 125, as the stock is climbing, right? 130, 135. I'll be looking at where they are in terms of where the price is relative to the average. If the candles are far away from the average price, that's great for you as a long holder. The moment the candle kind of closes below a moving average or either one of these moving averages, you may want to get out, right? So if I am looking at this day and price closed below 137, maybe I'll say, okay, then I'll take my stop. But for a trade like this, you basically are just going to continuously move up your stop loss until you eventually get taken out, because right now it's just kind of mooning. It looks like SanDisk in a way. It kind of reminds me of the SanDisk chart. Like SanDisk had a really nice consolidation period between 190, 240. So it came back up, bouncing around, and then we're getting a nice push with some expansion and some higher volume. So look, here volume is kind of low, it's decreasing, sellers are getting exhausted, and then boom, lots of buying momentum. And if you're looking to get into SanDisk, you could potentially get in at the top of this range to see if it breaks out of it. Why is there two different lines? So I added, if you go to indicators, you can go into here. You can add simple moving average. You can add up to 2 of them if you're a free user. Or you could add exponential moving average. Exponential moving averages I'll use for longer time framed support and resistance and a little bit of trend. But if you're trying to play a momentum breakout like this, the 10 and 20 are fairly standard when it comes to finding a momentum trade. Like SanDisk is a huge momentum trade that's been absolutely paying out all year so far. Micron is kind of another one as well. This one, it was a little bit more rough because it did have a nice pullback down to like 220 or so. But then after it got back up above, it broke out from 255 and it's just absolutely run. It's at 400 now. There was another stock that someone wanted, PCG. PCG. Okay, so PCG does have a gap here. If you don't know what gaps are, they're just gaps in the chart between an open and close or any empty space. And basically what a gap is on a chart is basically unfilled liquidity. And more often than not, a gap wants to get filled because there's liquidity or unknown amount of buyers or sellers in that zone. So if I'm looking at this stock, I'm seeing, okay, well, it broke above its most recent highs here. These are all considered kind of like their own mini key levels that are breaking through, right? And now it's kind of gone above the bottom of this green zone or this gap. So now it's in the middle of potentially filling a gap. So if you had calls here at like 16, you could have been holding them for a gap fill up into 19. Thoughts? Can you look at Western Digital? Sure. Western Digital is another momentum play that has kind of been like SanDisk and Seagate. It is currently finding a little bit of a tough time getting past 390 to 300. So this is where I would consider some fairly decent resistance, right? It's rejected off of it multiple times. But if you think if you think the music isn't coming to an end on Western Digital yet, then you could potentially try to get a long at 270 or 260. If you're comfortable with buying the 20 SMA entry at 260, you could get long down here for a hope that it continues, on these moving averages higher, right? But with SanDisk and all these other memory stocks, they are riding momentum and going through price discovery to the upside. So you really don't know how far the momentum will carry you. All you need to know is uh, how much momentum does it have and how much does it have left. The width between the moving averages kind of gives you an idea of how much momentum is in the stock. The closer the moving averages are together, that means momentum is not as much. But as you can see, it expands quite quickly. And that's basically, if you've ever heard of MACD, which is moving average convergence divergence, it's kind of that same concept where you're looking at moving averages where momentum is either expanding or contracting. But that's more of an advanced indicator. It's not like super advanced, but it's a little more involved. As the market is moving out of AI stocks and interest rates may drop in the future, will you be looking to get silver or gold? So the market getting out of AI stocks is kind of a mixed bag. A lot of software stocks are getting hammered, but I think AI infrastructure and data center stocks are still very much in play. If interest rates drop, that's actually really good for growth stocks. So I think anything that's high volatility, high growth will do well with interest rate cuts. Silver and gold are supposed to be safe haven assets, and I say that with quotes because it's been trading somewhat like crypto. But silver and gold should continue going up if interest rates go down because the dollar will continue to devalue. What do you think of Robinhood? I think it still goes to 65. We could take a look. Robinhood. I think Robinhood could find some support between 64 and 65. Yeah, it makes sense to me. It's got a lot of downward momentum. Tons of sellers at 120 and below. But we'll just have to see. It's holding 70 right now, but we'll have to see if there's a small gap here that may want to get filled first. So we could see a potential push up to 85. It's an earnings gap, so it could push up here. So if I want to draw my path, here's Robinhood, higher, lower high, kind of made a lower low here. I would say that Robinhood probably could potentially come back up to the zone, fill it out, and then go 65. Wait, so right there when it crossed, momentum died. So not necessarily, right? But momentum is greatest when you have a higher a price differential between your open and close, right? So here we're getting a lot of consolidation. So the moving averages will be very close together because the average price between these candles is very low. But as volume increases and the price difference between the open and close increases, we start to gain momentum. So on SanDisk in particular, we got a lot of consolidation here. You wouldn't really want to trade this range. You want to trade the breakout, either to the top side or downside. And here is a really good, I would say a really good setup, and one that I'm kind of disappointed I missed. I had it on my radar. I had it marked out and everything. I just didn't take it. But essentially, this compression of moving averages with consolidation in the top of the range, increasing volume, I think that's a great trade to the upside. And you'll see that with more volume and price increase, we're getting more momentum. Coinbase. Coinbase is an interesting one. I did a little write-up about earnings for Coinbase and Premier. Basically, if you tried to trade Coinbase earnings, you were absolutely cooked because there's no way to capture that move without getting Ivy crushed. But basically, it's Coinbase is holding a multi-year low. It was low in 2024, low in 2025, April. Technically, this other price level down at 120 is good too, but it held 140 so far. And with their earnings, they weren't great. They were actually really bad. But crypto, people think crypto might recover, right? So then people are starting to buy in with high volume off of that 145, 140 level. And what we could see here is we could see potentially a nice move back up into this gap fill. It's got to eat up all of these bearish candles though. So it's got a lot of work ahead of it if it wants to continue higher. Does this platform have alerts when momentum increases? I have no idea. I don't think it might. What do you think about Zeta? I see hype on X and fundamentals are good, but I'm not sure on the technicals. So Zeta is a software company. They are at risk of AI kind of displacing them a bit. They are getting hammered recently. Not that bad. From 24 to 15, okay, that's maybe 40% retrace or so. And actually, I don't even have to guess. I can just measure it. From top to bottom, 40%. Yeah, 40% retrace. So if I'm looking at Zeta from just a technical perspective, 14, 12, excuse me, and 11, these would be areas that if I'm a buyer, I may look to add. And that's just going off of where price kind of tapped most of the time before either bouncing up or rejecting. But right now it's got a lot of downside momentum. If I look at the market structure for this, it came up here, bounced off this level, made a higher high, but then it started making higher lows, or sorry, yeah. Lower high, lower low, lower high, and it's in the middle of potentially forming a lower low here before maybe bouncing off. $16 is also an interesting area where price kind of bounced twice here on the daily chart. It bounced here but broke below here. You could see here that at $16 on Zeta, when sellers got control of the stock and pushed it and closed to 16, more sellers came in to try to push it more. Basically, sellers are saying, oh, well, stockholders are basically saying, oh, Zeta, it's fallen below a previous demand. I think I should get out. But it's holding 15 now, so we'll see if it's a short-lived bounce or if it's just a rollover into next week. What about Thinkorswim? Does it have alerts, and can you chart like this on Thinkorswim? Yeah, you can actually. You can do horizontal lines on Thinkorswim. You can add all the same indicators. You can draft up trend lines on Thinkorswim as well. But TradingView is pretty simple, right? So like, you can draft it up however you want. You can put as much crap on your screen as you want, right? But me in particular, I like having less. Less is more for me. I like being able to see things simply. So like here, I might take off my moving averages and I'll add volume profile back. Oh, which one did I use? I always forget which. There you go. So I like using volume profile, and what volume profile is it tells you where the most volume was conducted at a given price. So yeah, you have volume down here, but basically all volume profile is taking these volume bars and putting them like this. So I can say that on Meta's chart, a ton of shares have been exchanged at 660 and anywhere from 660 to 670. And what this is telling me, right, if I have a demand or a supply and demand zone, if there's a lot of volume being conducted there, that can tell me one of two things. That is either telling me lots of buyers are trying to get in, or that's telling me a lot of sellers are trying to push down the price. Only time will tell me, whether that's the case, right? So if I'm looking at Meta, we're currently kind of under where a lot of shares were being either bought or sold. And because of the price action I'm looking at here, I'm more inclined to believe that this is sellers trying to get in here. Down, it's going to try to come down back down to 620, 600 or so. My hope is that it gets to 620 and bounces off of this zone, but we'll just have to see. So would coin be a good long? I'm trying to learn swing trading and basic small money options contracts. Can you save drawing on TradingView and always come back to it later? Yes. On TradingView, if you make an account, it's free. If you have a Gmail account, you can just log in with Gmail, but you can use any email. And you can save your charts. Basically, you can draft up any chart, and it'll save your data for that chart. Yeah, so for Meta in particular, right? Meta could very well be a decent short, right? If you got puts at 660 or so, it could be good for a decent short down into this previous zone of lows, right? It did hold it did hold 580, it did hold 600. I'm looking for it to now hold 620 or so. I do have calls from up here at 680. Not that many, but yeah, we're basically past the point of invalidation for me, and I most likely should have closed them out. But if Meta is going to bounce, it's going to bounce here. It just filled a gap from its earnings report from 675 to 740. It filled this gap entirely, and it's retraced it again. So, does it save automatically? Yes, it does. So it's going to bounce off 600. It potentially could. It bounced off twice with the double bottom here at 600. It bounced 4 times off of 580. So this one, I feel like 580 is a pretty decent spot to hold. So now I'm kind of looking at 620 as a spot, right? There's a small gap there that could fill down into 620 first before potentially bouncing, but that's what I'm looking at here. Like 620 or so, bounce up and out for Meta. All right, so that is our class for charting basics. I've been going at it for about 45 minutes here, a little bit longer than I wanted to. Are there any questions regarding key levels, support resistance, what candlesticks are, how to read them? I'm open to any of those questions. I'm not going to look at any more stock specific requests, but just any general questions I can answer. Are we going to do any more intermediate and advanced charting in the future? Yes. Connery, yeah, so today was mainly charting basics. How long do you usually do expirations on puts, for example, here for Meta? So what I like to do is I like to get more time on my options. So usually 30 days or more. However, it doesn't always work out that way because the price and risk to reward may not be as as good, right? So maybe going shorter in date would be better. How's the educational side and premium coming along? It's still under development. I know it is taking a while, but I am making more course material. I'm trying to put together more slideshows and things like that for the people to read and for more presentations. So let's see. Stock hit the 200 EMA SMA to go long. So like if a stock is falling, right, and it hits a moving average, that could be a potential spot to add. But like on Robinhood, we saw the 200 EMA on Robinhood absolutely break down, right? And that was at 95 or so. It's now currently at 75. So the exponential moving averages, simple moving averages, they're decent for potential spots, but they are not guarantees. Hello, just want to ask, what app can I use for a newbie that I can practice first? So if you want to practice your charting, TradingView is free. If you want to practice options trading, paper trading, you can do that on Robinhood or on Webull. If you want to practice just stock trading, you can open an account with Charles Schwab and get Thinkorswim for purely paper trading. EMA is exponential moving average and SMA is simple moving average. They take data points from the price action. I've personally never used TradingView for paper trading, but if that is something that TradingView allows you to do, then you can try that.